Hey everyone, it's Kenton Becker, American Pacific Mortgage. I am here again with another weekly video tip for you. Okay, so for the last few weeks, I've had announcement videos about announcing different states that I can do loans in now, Idaho and Montana. Announcing income limit increases for the down payment assistance programs. Also last week announcing the conforming loan limit increases going up to $715,000. So lots of awesome changes. This week, I want to talk about life changes. The main points that I want to hit is job changes, life changes like marriage, death, and then also the big one that I see that does affect a lot is divorce. So first with a job change. So there's different types of job changes. You can have a promotion, you could have a different job but within the same industry, and then you could have a complete career change. When it comes to a job promotion, basically with a job promotion, as long as your income's not changing, going from regular income hourly to say commission, as long as that promotion is just maybe a pay increase, a salary increase, then you're fine using those increased numbers. All you need to provide is basically an updated pay stub, and that's about it. When it comes to a different change of employer, maybe to a new company, as long as the new job or employer that you're going to is going to be a similar line of work, and as long as the income is also going to be consistent. So if your income is going to be hourly, if it's going to be salary income, at the new job, then you're fine using that new income. We usually just need to show 1 or 2 pay stubs and we would be good. The only time we run into issues is if this new job that you're going to is going to change that income. If you are changing from a consistent hourly income to say a commission income or commission base, it might require you to wait a little bit longer before you can use that income. Now, the only other thing that I want to talk about with this change could be a career change. And really this would be if you're going into a completely different line of work, that can sometimes cause problems. So you want to make sure if it is a different line of work that we can at least point to a skill set, something that we can show links to your previous job. If it's a completely different career, you may need to wait at least a year to be able to utilize that new income. The other consideration is if you were doing a career change where you were going from an hourly W-2 position to self-employed. If that were to happen, you would have to wait 2 years with the self-employed income to be able to use that income. So keep that in mind. Okay, so the other life change that can happen is death. If you're looking to buy a house and there's a loved one that passes away, it probably won't affect anything with purchasing the home, other than you now won't have that additional income. If you were in a pre-approval situation and there was a death, you need to reach out to your loan officer as soon as you're able to, so that they can make any adjustments to your pre-approval. In most situations where it's somebody who already owns a house and now they're asking questions about this loved one passed away, they're still on the loan, they're still on title, what do I do? You can get that person removed from the loan and from title just by basically providing a copy of the death certificate. The lender can do this. In order to remove them from title, you would just need to reach out to a title agency that can help facilitate that. And if you do need a referral or a name for somebody, I can definitely recommend a couple title agencies within our area. Marriage is the other life change that can happen. Again, in 2 different ways. Marriage before you purchase a house, or marriage if you already own a house. If the marriage happens before you've purchased a house, then kind of like the death situation, it doesn't really affect too much. It's just now if you're already pre-approved and you just got married, let's add the spouse to the loan and see if it helps maybe give you better numbers for your pre-approval. If you already own a house and now now you're married, again, we can add that spouse to title pretty easily by working with a title agency. Now adding that spouse to the loan, that's a different story. That would actually require you to refinance to put them onto the loan and to be able to do that through a refinance. Most likely you wouldn't need to do that unless it was in combination of maybe doing a refinance to lower your interest rate or save money or pull cash out. Most of the time, the main focus would be to put them on title. Okay, the last life change is with divorce. Again, there's 2 different things with divorce. One is if it's a divorce that's happening before you're pre-approved or before you own a house. And then the second is divorce that happens if you own a house. Now, if it's before you own a house, this can cause some complications because if you're in the middle of a divorce, the underwriter is going to want you to finalize that divorce first before you can move forward with the home purchase. The reason why is because there's uncertainty if there could be child support, spousal support, or alimony. And so that can create uncertainty for the underwriter to move forward while you're in the middle of a divorce. So in most situations, it would be required of you to wait until the divorce is finalized to be able to move forward with that pre-approval. You can also do what's called a legal separation. And if you have done a legal separation, you can actually move forward with the home purchase based on that legal separation. It's kind of a pre-divorce in a way. The courts still decide if there's child support, spousal support, alimony, even in a legal separation. So that can be used to move forward with a pre-approval. Now, if you already own the house and you're going through a divorce now, many times what happens is the courts will decide who keeps the house, who gets a certain amount of equity of the house, and then who moves on. A lot of times I've been involved in these situations where after the court has decided who keeps the house, who gets equity, etc., I can get involved to help not only facilitate a refinance, many times it's a cash out refinance to pull out some equity and pay the other party. Also, helping that other party, many times they want to take that equity and reinvest it into their own house. So a lot of times it takes a loan officer to get involved and basically help facilitate some of the stuff that's happening. Not only because the court orders certain things to happen, such as refinancing the ex-spouse off of title, off of the loan, and then also if there's a certain amount awarded to that spouse, that ex, you would need to provide that to them through many times a cash out refinance. So I've helped several clients do this, and it really does take a loan officer that's sensitive to this situation because you're ultimately dealing with two different parties that could be on good terms, maybe not on good terms, but ultimately they have a desired outcome, which is to get things separated and do it as quickly and as cleanly as possible. So in all of these life changes, there are options for you. Some options are immediate, other options might take a little bit of time. In all of these life changes, it's just important to work with a loan officer that is experienced, that has dealt with these different situations for many different clients before and knows how to navigate some of the issues that can come up. Hopefully this helps you. If you've had questions about this or you know anyone that maybe is going through these situations or has questions about this, you can forward this on to them. You can always call me, email me, text me, and I'm happy to answer those questions for you as well. Thanks so much for joining me on this week's tip. Have a great week.